Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some charts today, some foreign exchange charts. And the first one I'd like to look at is the euro against the dollar. Now, if we look at this, we can see a second bullish white soldier today. The market rose up just short of the 2020 high posted last week, and interestingly closed over both the broken yet seemingly still echoing 2011 to date downtrend, that's currently at 118.25, plus the June 2018 high at 118.51. It breached but did not manage to close over the extension to the top of the old diamond bottom upper channel line, currently at 118.92. Today we've moved even higher for a fresh new high. However, the market seems wary of doing so and has recently pulled back down. The question is still out there whether these moves have been an ammunition gathering exercise before a further attempt higher or a topping out action, much like we saw back in March. Now, caution. There is an argument that what we have seen over the last 2 weeks has been a build-up to a potential double top. I'm not entirely comfortable with that idea, but I can see where it is coming from. The next chart to look at is cable, aka sterling against the US dollar. A bullish white soldier yesterday, but nothing to write home about. The only two things to mention are that, thankfully, it is not another indecisive spinning top action. I was starting to find them a bit tiresome. And secondly, the top side was capped by the same acutely rising middle time, currently 131.72, of the May to June bullish Andrews pitch that has been an obstacle these last 2 weeks. It is being capped again there today, so far. The market is understandably starting to get a little antsy as to approaching the combination of the March high at 131.99 and the key 50-cent Fibonacci line for the whole of the 2016 move at 132.33. The next chart I look at is euro against sterling. A very small follow-through high yesterday to the previous 3-day bullish morning star pattern. The base of the pattern was on the combination of the short stroke medium moving average, currently at 90.09, and the lower time, currently 90 even, of the June-July bullish shift pitch walk. These 3-day patterns are somewhat unusual, but not that rare. Perhaps most interesting was that the first day of the pattern was made up from the end of last week's weekly key reversal down, last Friday itself. Anyway, yesterday's bullish action was capped by the short moving average, currently at 90.57. Meanwhile, today, we've had so far a big move lower. We could be actually on for a bearish engulfing pattern of all things today, as prices have dropped even below the lower time. Interestingly, underneath the lower time, we really don't have that much support until the medium moving average, currently at 89.28. So it'll be interesting to see what happens. The next chart to look at is the US dollar against the Indian rupee. A nice follow-on lower yesterday to the previous session's bearish harami, closing as it did below the recent combination of lesser Fibonacci and short moving average in the 74.90 area. However, that didn't last. Today, we've pulled up just over the same combination again. Looking outwards, we have some pretty solid looking resistance from the short stroke medium moving average overhead, currently at 75.34. And it has to be said, the combination around the previously mentioned short moving average still has some form of support. I suppose yesterday was a time trip back, really, back to where we were last week and the week before, just above the lesser Fibonacci level at 74.46 and the adjacent late March low at 74.35, both of which the market has shown an aversion to testing. It's not really surprising, if you put it that way, that the market moved back up. The last slide I look at is the US dollar against the Brazilian real. A sort of follow-on yesterday to the previous session's bearish harami, but really it turned out to be a 2-day meeting lines pattern. These tend towards the bullish, though not wholly so. A question in this case is that this 2-day pattern is in the wrong place, thus making it even more awkward. Meanwhile, we still have the medium moving average, currently at 533.17 topside. And because of yesterday's action, a new 3-pointer downtrend, currently at 536.99. We also still have the 50% Fibonacci line of the mid-March to May move at 530.54. This one has been, and still is, a significant support resistance level. So that about wraps it up. So good trading. Stay safe in the markets and in real life.